Good day, everyone, and welcome to Hydrocarbon Processing's 48th annual forecast presentation. My name is Catherine Watkins, and I'm the publisher of Hydrocarbon Processing, Gas Processing, and LNG, and our recently launched magazine for the hydrogen sector, H2 Tech. This morning, our editors will present some of the major trends that they're seeing in the hydrocarbon processing industry, growing regions of activity, capital spending, project activity, and our forecast on capital, maintenance, and operating spending. I'd like to start by thanking our sponsors, Atlas Copco and Accents, for supporting today's forecast. We appreciate their contribution to this event. Before introducing our speakers this morning, I'd like to take just 2 minutes to quickly review what hydrocarbon processing will offer the industry in this coming year. First, our 2022 HPI market data book is now available and will be offered at a 10% discount for attendees today. Please email Jeanette for further information or to buy your copy. Next year, hydrocarbon processing will celebrate its 100th birthday, and we're offering companies that have left a mark on the industry the opportunity to communicate that to our readers. Contact us today at info@hydrocarbonprocessing.com for more information, as we'll start publishing the history of the HPI with the January issue. Reaching over 120,000 industry professionals in every refining and major petrochemical plant in the world, we help companies communicate their brand and products to our readers. In addition to our traditional media for brand recognition and product marketing through print, digital, and our daily newsletters, we offer lead generation opportunities to our clients through sponsored webcasts, surveys, and podcasts. Our weekly podcast series for the HPI is called The Main Column and is available on our website, on iTunes, and on Blueberry. We're seeing about 60,000 downloads each month for our editorial and sponsored podcasts. We also recently launched a series for the hydrogen sector called H2 Tech Talk, which is already seeing over 200 downloads per episode. For 2022, we'll be updating the Gas Process Handbook, the definitive listing of the major processes used in the gas processing sector, and the H2 Tech editors are working hard to launch our first ever electrolyzer handbook for distribution early next year. With that, I'd like to introduce the talented and esteemed editor-in-chief and associate publisher of Hydrocarbon Processing, Lee Nichols, who will present the forecast. He, along with the help from his excellent editorial team, put in the hours researching, verifying, producing, and now presenting this data. Lee?
Excellent, perfect. Well, thanks, Catherine. And like she mentioned, my name is Lee Nichols. I'm the editor-in-chief and associate publisher of the 3 publications you see here. I'm going to focus a lot on global construction and investment with a primary focus on the refining industry and the gas processing and LNG sector. Now, my colleague, Mike Rhodes, he's going to focus his presentation on the petrochemical side of things. Now, due to time, of course, we're going to show some of the major initiatives from a macro level. However, if you do look at the 2022 market data book, which is for sale right now, it actually goes into a lot more details, especially on things like capital spending, project details, as well as those crucial trends, regulations, initiatives that are shaping the hydrocarbon processing industry today and into the future. It actually breaks these things down by individual countries. So if you're looking for a lot more detail, we definitely recommend the Market Data Book 2022. And they make great stocking stuffers for holidays or birthdays or anniversaries, you know, so you can give the gift that just keeps on giving. Surprise your loved one with a Market Data Book 2022. All right, so before we get started, I would like to mention that a lot of the data that you are about to see originates from Gulf Energy Information's Global Energy Infrastructure Database, or what we'll refer to as the GEI database. So this database is a detailed database that provides information on capital projects around the world, as well as installed assets around the world. So things like LNG import-export terminals, gas processing plants, pipelines, and so forth. Now, the GEI database has actually added a new section on things like renewables and hydrogen. However, for this discussion, we're actually only going to be focusing on the hydrocarbon processing side. So refining, petrochemicals, gas processing, and LNG. Now, if you do want more information about these sectors, as well as those renewables, hydrogen pipelines, things like that, definitely check out energyinfrastructure.com, or you can talk to Ed Bramwell, who runs that division. He can provide more information on the database for you. All right, so what you're seeing here is active downstream project investments globally. So what we are tracking is more than $1.8 trillion in downstream projects. So this number represents projects that have either been announced or they're on some phase of the project's planning, engineering, or construction timeframe. Now, you can see here, of course, that the Asia Pacific is by far and away the leader when it comes to announced capital expenditures. Most of the countries here are investing in all sorts of areas of their hydrocarbon processing industry, from refined products, petrochemicals production, as well as LNG export, import terminals, depending on what country you're looking at. Asia is actually more than double the next highest CapEx region, which is the United States at $320 billion. Most of that capital expenditures is within the gas or the LNG export terminal market, as well as petrochemical capacity construction, which we're going to get to here a little bit later in the presentation. Now, following the US, you can see is the Middle East at $280 billion. That region is also investing heavily in refined and petrochemicals products, mainly to diversify their portfolios, which again, we're going to get to a little bit later in the presentation. Now, I do like to mention those three regions because the Asia Pacific, the Middle East, and the United States represent more than 70% of active capital investments globally, with the Asia Pacific region accounting for 40% alone. All right, so what we're seeing here is active projects by region and sector. Right now, the GI database is tracking more than 1,000 active projects globally. Most of those projects are within the refining sector. And in total, most of those projects are, of course, located in the Asia Pacific region. In fact, Asia represents about a 40% market share in total active projects globally. That's then followed by the Eastern Europe, Russia, and CIS region at 14%, followed by the United States, and then the Middle East. Now, what you see here is a snapshot of active projects over the past few years. So this analysis runs from December 1 to December 1. And the reason we did that, of course, is so we can compare apples to apples. What we saw was an uptick in total active projects from 2018 to 2019. However, that number did drop by about 4% from 2019 to 2020. Now, when we compare active project market share year over year, we did see about a 25% decline in active projects globally. Now, the main culprit of that was, of course, the COVID-19 pandemic, which decimated fuel demand, and it made many owner-operators start to rethink not only future market dynamics, but of course, in capital-intensive investments. Now, we did witness a lot of projects actually get put on hold. We saw FIDs, or final investment decisions. We saw many of those get delayed. Construction was halted or delayed, primarily due to safety concerns. And then some we just saw were just actually abandoned or canceled altogether. Now, there is a silver lining here. We have seen a lot of projects restart construction over the past year, which is a good thing. And we have seen a lot of new projects be announced this year, which is also nice, which we'll go through here in just a sec as well. Now, the last bit of data I did want to show you is the breakdown in total market share by sector. Like I mentioned, refining is the leader. It represents about 41% of the active projects out there. That's followed by the petrochemical sector and then the LNG gas processing sector at 35% and 24% respectively. So here's a breakdown of active project market share by activity level and region. If you look first at the pie chart there on your left, you can see that nearly 70% of active projects are in pre-construction phases. When we look at pre-construction, the largest section is planning or proposed at roughly about 38%. And about 32% of active projects globally are under construction currently. Now, I did mention some market share analysis when it came to regions for total active projects. Here's a detailed breakdown on the right side of your screen here. Like I mentioned, Asia Pacific is the leader, represents about 41% in active projects. That's followed by Eastern Europe, Russia, and the CIS at 14%. And then the Middle East and the United States both represent 12% active project market share. So this is what we're seeing now from new project announcements in 2021. Again, Asia Pacific is the leaders here as well. The Asia Pacific region accounted for 36% of active total project, new project market share this year. Most of those projects were located or are located in China and India. In fact, those two countries comprise of about 60% of the new projects that were announced in the Asia Pacific region. The second highest new project market share was in Eastern Europe. That's primarily because of Russia. They make up about 60% of the projects announced within that region. They're focusing a lot on new LNG export capacity, as well as finishing up the refinery modernization program and to build additional polymer production capacity. Now, when we look at the Middle East, a lot of those new projects that have been announced this year is to increase refined products production as well as petrochemical capacity. And in the US, most of the projects that have been announced were actually for the construction of renewable fuels plants, which is a big trend that we're seeing right now, especially in the US. So that's kind of an overview of the capital project numbers, spending, and analysis. What we're going to do now is we're going to dive a little bit deeper into the individual sectors. So first, I'm going to start off with refining. And like I mentioned in the beginning, we are going to see kind of a more macro level here. But if you do want to get deep down into the details of individual countries and find out about the spending, the initiatives, the regulations, things that are really shaping those countries and regions, I definitely recommend the Market Data Book 2022. So according to the United States EIA, global oil consumption has increased this year, and it's actually forecast to increase next year in 2022. The association expects that that global oil demand is going to average about 97.5 million barrels per day this year. That's actually an increase of about 5 million barrels per day from last year. And then next year in 2022, that demand is supposed to increase an additional 3.3 million barrels per day and average more than 100 million barrels per day. Now, this is quite a stark contrast, as most people remember in April 2020, when global oil demand actually fell to around 80 million barrels per day. So it's a lot of a stark contrast there. Now, that momentum, like I said, is going to continue into the mid-2020s. So you can see here, this is data from the IEA. Global oil demand should remain above 100 million barrels per day through 2026. And as oil consumption increases, we are seeing a stark increase also in oil being used for petrochemical feedstocks. Now, when I say that, the IEA forecasts that naphtha demand, which is used to produce petrochemicals, is forecast to increase by about 1.2 million barrels per day by 2027. And when we look at other petrochemical feedstocks like LPG, ethane, that's expected to increase by about 900,000 barrels per day within the same time frame. And now this is something that, of course, Mike's going to touch on a little bit later in his presentation. So let's look now at distillation unit capacity additions as well as secondary unit capacity. So globally, crude distillation unit capacity is roughly about 102 million barrels per day. And according to OPEC, global CDU capacity is expected to increase about 5 million barrels per day by 2026. That's the graph you see in the top left-hand corner of your screen there. Nearly 2 million barrels per day of that capacity is going to be added in the Asia Pacific region, and then that's followed by the Middle East. Now, if you look at the graph in the bottom left-hand corner, Asia is also going to be the leader when it comes to secondary unit capacity additions. So in total, global secondary unit capacity is expected to increase by about 10 million barrels per day. The largest area of that is going to be in desulfurization capacity. Roughly about 5.5 million barrels per day is expected to be added over the next few years. And that's primarily due to regulations in many countries around the world that are trying to limit the amount of sulfur in their transportation fuels. So they're basically trying to produce things like low sulfur, ultra low sulfur fuels. And that's kind of what we're seeing here on this figure here. So this is here from Stratus Advisors. It's a major trend that we are seeing, and we have seen for a while now in the refining industry. Basically, companies and countries are investing heavily to produce ultra low sulfur transportation fuels and things like ULS diesel, ULS gasoline, ultra clean jet fuel, things like that. Now, some of the initiatives are listed here. So you have things like China 6, there's Tier 3 in the United States. There's also the LCFS in places like California, as well as a couple other states that are enacting similar regulations. There's Bharat Stage 6 in India, Euro 5-6, and then of course Bharat Stage 6 in India. Now, that idea of clean fuels and transportation fuels has also moved into the global shipping sector. Last year, starting in January, the IMO did enact their global sulfur cap, went into effect January 1, 2020. And so that calls for low sulfur fuels in the marine sector. Now, the refining industry is also making additional regulations to blend more biomaterials into fuels for the increased production of biofuels. Now, this is include things like using corn to produce ethanol. And many nations around the world are now starting to beef up the amount of bio content within those fuels. Now, we're also seeing a lot of investments in the construction of renewable fuels plant. Like I mentioned, it's a big trend going on in the United States with things like renewable diesel and the construction of new plants to produce biojet fuel, or what's known as sustainable aviation fuel. And a lot of that has to do with trying to decarbonize the skies. Now, major investments also include newer upgraded units or technologies to help mitigate carbon emissions and energy intensity and boost efficiency within those plants. So I'm going to transition now into the gas processing and LNG sector to provide some more of the major trends and investments we are seeing globally. Again, Market Data Book 2022 will go into greater detail regarding these trends globally. So you can see here, global natural gas demand is forecast to increase into the late 2030s. It's going to actually be the strongest growing fossil fuel within the forecast period. Now, one of the major areas that is going to see significant growth is the LNG sector. Now, demand for LNG is forecast to increase into the mid-2040s. To satisfy that demand, of course, additional LNG supplies are going to be needed. And I don't know if you saw the report just, I guess, maybe a week or two ago, but Morgan Stanley actually came out and said that LNG demand is expected to grow between 25% and 50% by 2030. Now, to satisfy that global demand, they forecast that about 73 million tons of LNG capacity is going to be needed. That's an estimated capital investment of more than $65 billion. Now, of course, the next question is who's going to supply all that LNG? Now, you can see here that roughly nearly 900 million tons per year of new LNG export capacity is actually awaiting final investment decision. That's that giant skyscraper you see at the very right side of this bar chart here. Now, the largest capacity awaiting FID is located in North America. That's actually going to be mostly inside the United States. Now, there's a lot of future demand for natural gas, but of course, not all of these projects are going to be built because the market can't absorb all of this LNG that's been announced. The companies that can secure things like long-term contracts so they can, of course, get financing for these capital-intensive projects are going to be more likely to move into or greenlight their FIDs in the future. Now, the same goes for receiving terminals. Now, of course, because you have to ship that LNG somewhere, right? Now, this look here is an existing and future regasification terminal built. You can see that the Asia Pacific region is going to be the dominant demand center, which it has been, I believe, over the past decade or so. Now, many nations in Asia, particularly places like China and India, they're going to be responsible for the construction of tens of millions of tons per year of additional LNG import capacity. And that's kind of what we're seeing here from this slide here. Now, China is going to be the leader in regasification capacity, not just in the Asia Pacific region, but globally. China is forecast to increase LNG regasification capacity by more than 80 million tons per year which could reach mid 170 million tons per year over the next decade. That's in addition to the natural gas pipelines they are building, or they're having built from places like Russia to fuel things like power generation inside the country. The following China is going to be India. They're investing more than 60 billion to build LNG import terminals, as well as natural gas distribution networks within the country. And what that country is trying to do is actually increase natural gas as part of their total energy mix from about 6% roughly today up to 15%. Now, I do have a couple other countries here listed, like Vietnam, Philippines, Thailand. They're investing heavily in what's known as, of course, LNG to power projects. So they're building LNG plants, whether it's an onshore terminal or some type of floating vessel that's going to feed natural gas to gas-fired power generation plants onshore. Now, one area I would like to mention is Russia. And the main reason why is because they're investing a lot of money to increase LNG export market share up to about 20% by 2035. Right now, the GEI database is tracking more than 82 million tons per year of LNG capacity that's under development within Russia. Now, I've listed a few of the major projects listed here. And they're also, of course, building natural gas pipelines, things like Nord Stream 2 into Europe, as well as putting up full operations of Power of Siberia, which actually sends natural gas into China. They are working on Power of Siberia 2, that's under development, which is actually going to send more natural gas into China. Now, part of the Siberian Power of Siberia line is the construction of their massive $13.5 billion 6-train Amur gas processing complex. As of right now, all 6 trains are expected to begin operations sometime in the mid-2020s. Now, switching focus to the United States, the GI database is tracking more than 360 million tons per year of active LNG projects. In fact, if we look at the IGU's report, the US actually represents about 40% of pre-FID capacity globally. Now, shown here are active projects within the region. Well, now, one item to note, as you probably saw, I think it was yesterday or the day before, is Jordan Cove, that one in the top left-hand corner of your screen there, which is located in Oregon. They actually have shelved that project. But you take away one, you gain another one, because Venture Global actually announced they're planning on building a $10 million, 20 million ton per year LNG terminal in Louisiana called the CP2 project. So, like I said, you lose one, you gain one. Now, as you can see that most of these projects, they're located in Texas and Louisiana. All these projects, I mean, like I mentioned earlier, not all of them are going to be built out. However, we are noticing that the United States should reach about 80 million tons per year of LNG export capacity by the mid-2020s. And that could actually reach about 100 million tons per year by the end of the decade or into the early 2030s, depending on some FIDs that need to go out. Now, that additional capacity is actually going to propel the United States to become the leader in LNG export capacity. For a while, we'll have to see, because Qatar, of course, announced that they're boosting their LNG export capacity to about 127 million tons per year within that same time frame. So with that, I want to hand things over to my colleague, Mike Rhodes, who's going to speak about the global petrochemicals industry.
Okay, thanks, Lee. Appreciate it. Thanks to Catherine. Thanks to our audience for joining us. I will touch briefly on the petrochemical sector for our forecast for that for the next year. I'm the managing editor for Hydrocarbon Processing and Gas Processing and LNG, and our award-winning H2 Tech as well. So let's just jump right into it. Global thermoplastics demand is forecast to increase significantly over the next 25 years. As shown by this data from Statista, thermoplastics demand is expected to increase from 445 million tons per year in 2025 to nearly 600 million tons per year in 2050. Most new plastics demand will be in developing nations in Asia, which would explain the significant capital investments in new production capacity. And we'll talk about that in just a couple minutes. Petrochemical feedstocks. As Lee mentioned, a large amount of petrochemical capacity being built will lead to a significant increase in petrochemical feedstocks demand. As shown here, LPG or liquefied petroleum gas, ethane and naphtha demand is forecast to increase over the next several years. According to the IEA, LPG and ethane demand for petrochemical feed will increase by 900,000 barrels per day by 2027, while naphtha demand is forecast to increase by 1.2 million barrels per day within the same time frame. So where is this new capacity going to be built? Well, the GEI database is tracking more than 350 active petrochemical capital projects. At 45%, the Asia Pacific region holds the largest market share in active petrochemical projects. This is followed by Eastern Europe, Russia, and the CIS with 15%, and then the US and the Middle East. When active projects are broken down by activity level, nearly 60% are in pre-construction phases. This sounds like some sort of Star Wars movie, Asia, rise of the integrated complexes. One major trend that we are following is the increase in new integrated complexes being built. Although this is not concentrated in one region, the Asia Pacific region is the leader in new integrated investments, primarily with capital intensive investments in countries like China, India, Indonesia, Brunei, among others. This map shows major refining and petrochemical integrated complexes under development in the Asia Pacific region. The projects listed here account for more than $150 billion in capital investments to 2030. As you can see, most are concentrated in China and India. These projects are in addition to hundreds of billions of dollars in additional petrochemical expansions, upgrades, and grassroots facilities being built. At present, Eastern Europe, Russia, and the CIS comprise nearly 75% of active projects in the European region, with Russia leading with a 40% market share. Due to a deficit, Russia is investing heavily in new polymers production capacity. A list of notable Russian petrochemicals projects are listed here. CIS countries are trying to monetize abundant domestic resources to build out petrochemical processing capacity for domestic use, with surplus heading to the export market. And Western European countries are investing more in plastics recycling facilities, as well as in new ethane capacity, ethane cracking and ethylene derivative capacity. Let's take a look at the Middle East, which is investing heavily in new petrochemical capacity as well. At present, the GEI database is tracking more than $80 billion in petrochemical investments in the Middle East. As shown, these are some of the notable capital investments in that region. This includes countries like Saudi Arabia and the UAE investing to triple domestic petrochemical capacity, as well as other nations that are incorporating petrochemical units into existing operations and or building grassroots ethylene units with derivative capacity. A quick look at the US petrochemical sector. It looks like the wave of ethylene capacity build out is coming to an end in the US. From 2017 to 2020, approximately 11 million tons per year of new ethylene capacity went online. Over the next 5 years, about 5 million tons per year is forecast to go online. As shown in this pie chart, most petrochemical projects are in Texas, and as Lee said, followed by Louisiana. Although capital-intensive build-outs are slowing, the US will still witness many new projects to produce specialty chemicals, methanol, ammonia, and urea, and others. And with that, I'll hand the presentation back to Lee for closing remarks.
Excellent, great. So thanks so much, Mike, for that. Yeah, basically what I wanted to focus on now, of course, is our forecast spending for 2022. So what you're going to see here is spending numbers of what we forecasted for 2021, and then of course the actual numbers that came in. You can see here that the lingering effects of the COVID-19 pandemic severely affected our forecast, especially for things like capital spending. Like I mentioned before, many of those projects, of course, delayed their FIDs. Construction was delayed for months due to safety concerns, and then of course, we saw several projects just outright scrap the project altogether. So with that, in 2022, we are expecting a total spending of nearly $490 billion, with most of that going towards capital projects construction, or roughly about $242 billion. Now, we believe maintenance spending will reach nearly $70 billion, with operating expenditures excluding feedstock cost at $176 billion. Now, here is a breakdown of spending by sector. So we are expecting most of the spending to happen within the petrochemical sector, something that Mike just went over. And primarily, that spending is due to the massive amount of petrochemical capacity that we see that's under construction over the next few years. So with that, I hope you found this information helpful. I know we went through a lot of data, but of course, should you have any questions about certain initiatives, projects, etc., please feel free to contact our editorial staff at any time. And finally, we do want to hear from you. We're always on the lookout for good technical editorial for our 3 publications: Hydrocarbon Processing, Gas Processing and LNG, and our latest publication, H2 Tech, which focuses on the technical side of the hydrogen economy globally. Now, if you have an article or column, or even just an idea or an abstract of what you'd like to talk about, please let us know. Please contact us. We'd be more than happy to work with y'all for our future publications there. Again, I'd like to mention that the HPI Market Data Book 2022 is on sale. And like Catherine mentioned, I think you get a discount, so that's pretty cool. So definitely there's a lot of benefits that are involved with this, especially looking at where the spending is, why the investments are being made, who's making those investments, as well as the major trends that are affecting the hydrocarbon processing industry now and what's going to affect it in the future. So definitely check that out. If you have any questions, please contact Jeanette. I have her contact information down there, and she can help you and provide any answers to questions that you may have. Now, lastly, there are some events that are going to be happening for us in 2022. First off, we have our first element, which focuses on the technical side of the hydrogen economy. Of course, we have our annual favorite, which is the International Refining Petrochemical Conference, which is IRPC. Both of those are going to be used around late quarter, probably May, June of 2022. That's going to be followed by our annual Hydrocarbon Processing Awards. It's always a great favorite there. Then we have our Women's Global Leadership, which is going to be somewhere in early to mid-November, followed by this exact same forecast, but a year from now. So definitely subscribe to our newsletters, and they can keep you up to date on specific dates, especially for things like abstract submissions and some important dates within those actual events. Now, with that, we want to thank all of you for joining us, the forecast today. And again, should you have any questions, please feel free to contact us. If you are interested in subscribing to, say, our newsletters, our publications, please definitely go to the sites. And then, of course, contact our editorial staff if you have any questions. With that, I want to thank you. We hope you have a great rest of your week.